Hey, what's up everybody? Welcome back to Bitcoin Chaser's Coinversation every single Monday. Today we're going to be taking a look at the cryptocurrency markets and using information that was released in the last week, and we're kind of going to have an open discussion about it and talk about obviously how it affects us as the community, how it affects ICOs, and all sorts of things blockchain and crypto. So the first order of business was Operation Crypto Sweep, in which NASA decided to release its information about its Operation Crypto Sweep. So right now I'm on the Bitcoin Chaser website on my trusty little phone. That's the beauty of these things. We can be portable about it. And we're going to talk about the projects that the NASA openly released information about into who they were in conducting their investigations. So the first one is Windward Coin, which allegedly used pictures of celebrities to advertise its cryptocurrency. The firm reportedly used photographs of Jennifer Aniston and Prince Charles. This is 100% correct. People are using images and other forms of media to showcase potential investors, potential advisors, potential supporters who don't even know about the project maybe, or do know about the project but are using their community based on who they are to kind of push contributions towards the project. Or in this case, they were just using pictures on a website of these famous people. And now, us being the community, we look at these people and we're like, you know what, like if they're successful, if they've made it, you know, they must be doing something right. They must have some information that I don't have. And we look at these websites and we say, you know, like, I think I could be a potential investor and possibly make money because someone who is already highly successful believes in this particular project, and maybe he has advisors that are informing him about these projects, which actually isn't the case at all when projects like these just use photos and images of these famous celebrities to kind of push hype, push contributions, and it's just not on, you know, it's just not on. This is actually protecting people who are coming into this ecosystem, but it's also making sure that the community is safe where they're putting their money. You know, we have to make sure that when we move our money into a potential project, into a cryptocurrency, that the information presented and the potential teams behind it and the advisors behind it and the supporters behind it are legitimate people who are actually behind it. So it's definitely a good one there by the NASA, making sure and checking out Windward Coin. Next is aka BTC Crush, were found to use phony videos to show finest working interior and exterior workings of its computer server farms. Now, I don't even understand why a project would want to do that, you know what I mean? Because if you don't actually have that technology available, if you don't actually have that mining farm, if you don't actually have the equipment that you're showcasing as your own, why on earth would you showcase it? You know what I mean? People are going to look at that and they're going to say, wow, you know, these guys are really doing something great. You know, they've got this crazy mining farm. They've obviously got a lot of potential to actually compete in the mining market. But in this case, that is not the case at all. Using false information like this is going to put you in a very bad place very fast, and the NASA is jumping on that and making sure that people like this don't actually have a chance to kind of blindside the community, which is great. And finally, number 3, Forex EA and Bitcoin Investment LLC tried to capitalize with the names of two powerful markets, cryptocurrency and foreign exchange trading. According to the release, the company told investors that a $5,000 investment will return $50,000 in 21 days. That is a very bold claim. To claim that there is a potential for 1,000% increase in profit, that is insane. You know, telling people that we are providing 1,000% profit in 21 days is just unheard of, and most importantly, it has to be second thought, because if you're going to showcase that and that profit doesn't turn over within 21 days, you've actually made yourself liable for that 1,000% profit in 21 days, and you've potentially blindsided your community. Once again, NASA jumping on that and making sure that we don't actually have to worry about people who could be falsifying claims like that just to get your investment. Rather, we are able now to look at potential projects, at potential ICOs, and actually make an investment that might actually be more achievable. I'm not saying this wasn't achievable, but I'm definitely saying making a claim like that is very bold and should definitely be investigated. And finally, on the footer of the article, we're looking at 2017 was Bitcoin's breakout year. Several new businesses exclusively related to Bitcoin were registered. Local authorities stated that NASAA's task force revealed that there were 30,000 crypto-related domain registrations in 2017. This increases the chance for scams in the eyes of the regulators, prompting local authorities across state lines and across the border to join forces against financial crimes. I agree. There has been a lot of projects that are surfacing at the moment. There are a lot of people that are registering new domains, that are purchasing domains, that are actually securing domains for a later stage so that they can launch their project or investment or cryptocurrency or news site, or there's just so many things happening at the moment that it's up to the NASAA to make sure that the people that are purchasing these domains aren't going to use it for a potential scam or potential ill act against our community. So, very well done, NASAA. I love saying that. I love that name, NASAA. Sounds crazy, right? And now finally, to put a final swing on things for you in the community, to leave some comments. The article mentions that not every ICO or cryptocurrency investment is fraudulent. That should have been the starting point of this operation. Scams hurt the cryptocurrency community the most, and there are willing actors within it who are actively pointing out the scams, attempting to educate people about how crypto works. Nevertheless, instead of enlisting its help, authorities in both US and Canada launched an operation that sounds like a threat to the whole space. The scope of the effort is still unclear, which makes CryptoSweep a threat to the community as a whole. If regulators would have sought to launch Operation Crypto Alliance and enlist the community's help to hunt these scammers down, the operation would be much more effective. I agree. If we were to combine forces in a crypto alliance where the community would be able to showcase which cryptocurrency projects are potential scams, we would have a lot more information coming in that the NASAA can then go out and conduct their investigation. But nevertheless, Operation CryptoSweep is now in order, and we're going to keep track of it and see what happens. So stay updated with Bitcoin Chaser to get all the news you need about this operation. The next article is the Iranian parliament says citizens bought $2.5 billion worth of cryptocurrency. That's absolutely crazy. An entire community could definitely purchase a lot of cryptocurrency. Now, it's not to say that this particular amount of cryptocurrency was bought maybe a year ago and the rise in value has increased the amount of cryptocurrency that we see as being bought. However, $2.5 billion worth of cryptocurrency being purchased, damn, you know what I mean? That's a lot of money. That's a lot of people purchasing cryptocurrency. And why are they purchasing it? Well, I think there's two factors. One, you have your rate of adoption, in which businesses are now accepting cryptocurrency and people are using these payment protocols in order to purchase goods and services, which is 100% correct. But then you also have the other side of the coin where people don't physically believe that fiat is offering the potential that it should, and people actually feel threatened by fiat a little bit. So the rate of adoption is definitely increasing throughout the world for cryptocurrency, and Iran is no exception. Their community is purchasing a lot of cryptocurrency. They don't fully believe in their local currency. There has been problems before. We all know about them. So with this, we will see a lot more adoption, and this article just showcases that. If you want to view it, the link is down in the description. Now, moving on to some external news sources, something that isn't on the Bitcoin Chaser website, but is still quite interesting and relevant, and obviously linked down in the description below. As you can see, the sun is rising, so I'm kind of battling to not get burnt, you know what I mean? Okay, so a man accidentally threw away $79 million worth of Bitcoin. Now, we've definitely heard about this. Stories have been floating around all over the place of people that are claiming to have had a whole bunch of Bitcoin and no longer have it anymore. I mean, we saw on the Big Bang Theory, I don't know if you ever watched that episode, but Sheldon Cooper actually took the Bitcoin that Raj and that Kuthapali and Howard and Leonard owned, and he put it on a flash drive to kind of make a prank towards Leonard, and Leonard lost the Batman flash drive. And it never specifies how much Bitcoin was on the flash drive, but definitely a good showcase of how it would feel to lose a large amount of money if you had got into Bitcoin and cryptocurrency a long time ago. So the article is by news.com, and it says Matthew Mellon, Scion of the Mellon banking fortune died on April 16 of a drug-related heart attack in Mexico. His family was unable to locate the passcode needed to retrieve his information. It was said to have been worth as much as $1 billion in XRP cryptocurrency, according to the Daily Mail. What? That is... okay, first of all, it's very sad, you know what I mean? Like, there has been ICO projects that have launched that are kind of trying to aid people in creating a will and that can be passed down to their next of kin if they ever pass away, because it's becoming very serious right now. You know, me as a person who's getting into crypto now could potentially have a lot more money in the future, and if I were to pass away in an unforeseen manner, how would my family feel about not having access to those funds? So here is a perfect user model of how it would feel and how it would actually end up being if you had been to lose a bunch of money. Now, in one instance, if you were working in fiat and all your money was stored in fiat, there was a potential that if you had a will and testimony, that money could be retrieved and passed down to you. However, with cryptocurrency, that isn't the case. Even if you put in your will that your cryptocurrency funds will go down to your next of kin and you pass away and you've never provided any form of passcodes or any form of passphrases or any kind of private keys, there's no way that that money will ever go to your next of kin. So a lesson and a bit of insight into what you would have to do as a person owning a lot of cryptocurrency to make sure that when you pass away, your next of kin can actually have access to those funds and benefit from the current rise in value that we're experiencing. So the article goes on to say losing passwords is the kind of nightmare that haunts Bitcoin investors. In fact, there are an estimated 3 million Bitcoins totaling nearly $33 billion lost because the retrieval codes have gone missing or the currency owners died without passing the codes on to the next of kin. Just ask James Howells, who lost a hard drive with the key to more than $79 million worth of Bitcoin. He says, I mined more than 7,500 coins over 1 week's time in 2009. There were just 6 of us doing it at the time, and it was like the early days of a gold rush, said the IT worker turned crypto investor, 32, who lives in Newport, Wales. 4 years later, I had only 2 hard drives in a desk drawer. One was empty and the other contained my Bitcoin private keys. Howells recalled, I meant to throw away the empty drive and I accidentally threw away the one with the Bitcoin information. In 2008, Bitcoin's alleged creator Satoshi Nakamoto published an open source code through which Bitcoins are mined by solving complex calculations. Embedded throughout the internet via extremely powerful computers, there is a finite number of 21 million Bitcoins. That is really, really terrible. Imagine you have 2 flash drives and you're like, dude, I'm just going to throw away the one useless one. I don't give a crap about it. 4 years later, you're like, damn, did I throw away the private keys to my Bitcoin wallet? And then for the next 4 years, you just look at the rise in value of Bitcoin and you're like, damn, I can't believe I did that. That is crazy. Keep your private keys safe, laminate it, put it in a drop safe. What's the problem? Banks might go away in 150 years, sure, but realistically, safety deposit box, you're not going to live for 150 years. Go put it in a safety deposit box. Keep your money safe, you know. Don't put it on a flash drive that you could throw away because you're trying to clean up, you know. You're having a spring clean. It's going to be the most expensive spring clean you've ever conducted. Not a good idea. The next article is from news.sky.com and it says treatment center for cryptocurrency addicts open in the Scottish borders. A treatment center is opening in the Scottish border to treat people who are addicted to trading cryptocurrencies. The residential treatment course for crypto addicts is based in a Castle Craig Hospital in Peeblesshire. I don't know if I said that right, but let's just hope that I did. The medical facility already runs treatment programs for drug and alcohol addiction and hopes to treat people addicted to trading cryptocurrencies with techniques developed for gambling addicts. Cryptocurrency trading is a very volatile kind of hobby. You know, you can make a lot of money one day, you can lose a lot of money the next day. Sometimes you can just be holding and in reality you're making money and losing money over a week period without touching anything. So imagine the kind of addiction you can get hooked on if you're trading successfully and you lose all your money. You're going to believe that if I just put a little bit more in, if I just do what I did before, I'm going to make that money. Or you see a coin rise and you're like, I was thinking about that, but I didn't actually go ahead and purchase that coin. I could have made a lot of money. Maybe I can find another coin, and you go on this like big search for it, and then all the coins drop because it's sea of red time, you know, when all the markets move down. And by the time all the markets move down, you're like, oh my word, I've just lost so much money. But maybe if I take it out now, I can put it in something else that's going to just make that money back. So at 17% loss, you withdraw your money and you put it in another coin, you make 25%, and then it drops, and you've now lost, instead of losing like 15%, you've now lost like 35%, and you're just like going crazy. Now you start putting more money in, and then when you put that more money in, you make maybe 200% profit over like 2 weeks, and you're like, damn, this is really good, you know. Then sea of red hits you, and you back down, and you're like, oh no, you know, I've lost 225%, I'm down 25%, I'm just going to remove my money again. Hopefully I can do something else. So that it's just a catch-22 problem. Cryptocurrency trading is for people that are using their brains, and also including a user case of hodl, you know, holding those funds. If there's a sea of red, don't remove your funds. The beauty of cryptocurrency is when you sell that cryptocurrency, you are accepting the profit or loss that cryptocurrency has generated. So if you're down 17% on your holdings and you remove it, you've accepted 17% loss. Now, it's not to say that it's going to keep going down more, which it might, but it's also not to say that it's going to go up again, you know what I mean? So just using a loose scenario of hodl is very important if you're going to be a cryptocurrency trader. The addiction is obviously related to gambling, and gambling is a very addictive sport, and people get hooked on it very, very fast because, you know, you've got this bit of money, you go to a casino, you make a bunch of money, and you feel like you've been relieved, you know, you got money for nothing. You know, that's one saying, money for nothing and your chicks for free. But it's not the case when you lose that money, you know, and then you're relying on your gambling or your trading to make that money back that you've lost. Maybe you've got a big debt coming up and you don't have enough money to pay that debt, and your last hope in your mind is to go into cryptocurrency and try and trade on the volatility and make that money so that you can pay your debt. Or you've lost a lot of money from a previous trade and now you're trying to make that money back. It's just a catch-22, you know. Don't trade money that you can't lose. If you're gonna lose the amount of money you're putting into the cryptocurrency market tomorrow, and you're not going to be able to stand on your own 2 feet from it, don't trade it. You know, you got a lot of time. You got like the next 20 years of crypto volatility just skyrocketing, 24/7 open markets, you know. Why not just trade 1/10 of your capital, right? If you can afford to lose that amount, and then you make that money, then go trade your profits. Go fucking throw it around, you know. Go put it in that coin, go put it in that coin, go put it in that coin. But don't take money that you need and go try and make a million from it. It's just a catch-22 bad scenario. Maybe you make it, but at the end of the day, you're going to reach a point where you really need that money, and your last resort, which is trading, is not going to help you. Simple. You know, you're going to lose that money, you're going to be in even more problems, and you're still going to try trade flipping just to make your money back. It's not good. The link to that will be in the description below. You can go give it a read and kind of make your own decision about it. And now, let's take a look at our final external source of information from finance.yahoo.com. So the article goes into what happened to Bitcoin BTC these past few days. We did see a massive drop in Bitcoin just the other day, just trading at almost $9,500, and now it's almost below $7,000, which is a big drop. You know, it's more than $2,000 per coin. If you're holding a lot of coins, you felt the loss. You know, most people have felt the loss that we're experiencing at the moment in this bear market. And it says, if the crypto market segments weren't depressing enough, regulatory news and chatter from all around the world are indicating tough times ahead for cryptocurrency. Bitcoin is taking continuous blows and recovery seems pretty tough. But what caused this situation and how much damage has been done? Let's find out in this article. So it goes into the idea behind Bitcoin, and it talks about the world's first and largest cryptocurrency. Bitcoin is famous for being the decentralized peer-to-peer network. And then it goes into recent failed bull markets. The failed bullish breakout has Bitcoin prices in deep waters. The decline started on Sunday when Bitcoin failingly attempted a comeback. Bulls could only raise the price point to about $8,644 and since then the market has been tumbling down to approximately $8,200, which has currently gone down to $7,300. There are several reasons for which Bitcoin markets and cryptocurrency markets as a whole is experiencing such extreme bearish trends. Analysts have pointed out that it may have to do with the Chinese ICO markets being highly active and resulting in strict regulatory actions. The Chinese government has officially announced that it deems shady ICOs as great risks and that the government watchdog is keeping a close eye on excessive speculation, fraudulent profit schemes, and fake propaganda. I agree. You know, with regulatory action being taken place, people who are in countries that are experiencing it the most might immediately try and go away from cryptocurrency. You know, jail is a serious threat for some people. More than that, losing all your money is a serious threat for some people. And when you believe in your government and your government's telling you that if you do this, you're going to lose a lot of money, it's a great risk, it's a serious risk, you're probably going to be doomed, you know, you kind of get a bit skeptical and you pull your money out. And that's what we're seeing right now. A whole bunch of people are pulling their money out. And the more money that gets pulled out, the more people feel that the money is just, that Bitcoin is just going to keep going down. And so they pull their money out and they pull their money out and the market goes down 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 and the market goes down. It's just a catch-22 situation. But at some point, and I'm going to go back to this a bit later, at some point that market is going to retrace itself, maybe not to the extent at which it dropped, but people who weren't pulling out or have pulled out and now see that Bitcoin is so low and so cheap that it has the potential to rise a lot, being almost $20,000 in December of last year and being at $10,000 in about April, and now being at maybe, say it goes to $5,500. People look at it and they're like, well, if it was $10,000 in April and it's $5,000 now, if it goes back to $10,000, do I make 100% profit? And that's exactly the case. You know, people are going to just as quickly buy back into the cryptocurrency markets as they've pulled out. And this is what I wanted to speak about. Natural adoption of Bitcoin is what is making the price rise. The volatility is what makes people feel like it's a bubble. You know, Bitcoin is naturally being adopted by the world. People are using Bitcoin for different purposes. We don't just have Bitcoin. We have Bitcoin Cash. We have Litecoin. We have Ripple. We have Stellar. We have Cardano. There's just so many coins that are being used for different purposes outside of ICO utility tokens. You know, ICO utility tokens have a whole ecosystem and market of their own. So when people are using these coins and using these utility tokens and actually purchasing goods and services with their cryptocurrency, we see natural rate of adoption. And that's what's happening. If we look at Bitcoin over the past 3 years, we see the natural rate of adoption outside of all its volatility of people selling when it's high because they don't know if it's going to go any higher or they really need their money. People selling when it goes down because they're scared they're going to lose all their money. It just creates endless volatility. But there is a natural rate at which Bitcoin is being adopted, and it will continue to be adopted, and all other cryptocurrencies will be adopted. Some might not be as successful as others, but there is a natural rate of adoption that people who own cryptocurrency should be taking into consideration when they want to sell. Because if they sell, they accept the loss. You know, even if they're at a profit and they sell, they accept the profit. But you're going to have to purchase back in if the currency or Bitcoin keeps going up. You're going to have to purchase back in to actually take advantage of that rise. So my question is, if you hold Bitcoin and you're not actually trading, why sell it when it's down, when there's 5 years of natural adoption that will continue to take place for maybe the next 25 years? Don't sell your coins. Don't sell your Bitcoin if you're not trading. Rather keep it, see what happens in a couple years, and don't trade or hold money that you can't afford to lose, because that's going to make you sell at a loss or sell at a slight profit, and it's going to be pointless. And with that, let's go back to the Bitcoin Chaser website, go over a last article, and then we'll wrap up this video. I'm just getting out of the sun because it was getting quite hectic at that point. Now I'm referring to an article on Bitcoin Chaser, which was released on the 22nd of May, and it says Goldman launches stablecoin tied to USD. Let's read about this. Goldman Sachs has been a hot topic for a while as they are starting to leverage blockchain technology. In December 2017, they reported to Bloomberg that they will have a cryptocurrency trading desk up and running by June 2018, just a month away from their launch forecast. Goldman announced that it will be launching a USD-backed stablecoin, the Circle USD coin, USDC. And then it goes into who is behind the Circle USD coin. Circle, which is a peer-to-peer payment technology startup founded in 2013 and headquartered in Boston, were backed by Goldman Sachs between 2013 and 2016. Circle announced in May 15th that it raised $110 million in venture capital to create a stablecoin backed by USD. This investment round was led by BroKaine Technologies, a Chinese firm that designed ASIC chips and produces cryptocurrency mining equipment. This new coin will be managed initially by a subsidiary of Circle called Center, which will be working with BroKaine to help launch the coins. Now, I haven't read into the article any further at this point, but my first question is, what is its relation to USD Tether? Let's find out. What is Circle USD coin? The new token will be called Circle USD coin, USDC, and will essentially be tokenized fiat money, which is backed by USD reserves. The theory behind the coin sustains that due to its fiat backing, the price will be less volatile than that of traditional cryptocurrencies. However, the core aim of this project is to incentivize mass adoption of cryptocurrency using the advantages of smart contracts and quick transactions with a token that can always be redeemed for USD. The token was built on the open source stablecoin framework from Fiat, which was developed by Center with the aim of being used for crypto trading and payments while operating in adherence to the US money transmission laws and associated regulatory frameworks. It will also be built on an open source framework with an open membership scheme, allowing other eligible financial institutions to adopt and participate. Now, we have to talk about the existing problems with fiat-backed tokens because they do exist. It says Circle has advised in their blog that existing fiat-backed cryptocurrency approaches have lacked financial operation transparency. To alleviate this issue, they aim to produce quarterly audits on the reserves backing the USDC coin and conduct strict anti-money laundering and other checks on individuals and companies looking to buy and redeem new coins. Potential criticism of the Circle USD coin. Generally speaking, a cryptocurrency is a means to gain independence from traditional banking institutions. Cryptocurrency was created to allow people to hold their own assets and transact with them securely without having to trust others. Cryptocurrency is also free from government control and KYC requirements in essence. Therefore, a coin which complies with regulation backed by government-issued fiat that is an alternative to a credit card or PayPal upgrade is the antithesis of crypto. Stable coins are an elusive goal. Fiat-backed cryptocurrency has been around for a while in the form of Tether. Nevertheless, there are a few continuous issues with any of these incentives. Number one, cryptocurrency is not known for being user-friendly. To incentivize adoption, Circle will have to solve something countless other companies have tried to do with varying levels of success, but without solving the problem completely. Without a permissionless, robust public blockchain, Circle will be playing a dangerous game in which hackers can change the ledger to their advantage. Now, we're talking about decentralized ledgers and the advantage of it. Bitcoin has a decentralized ledger. No one institution can change that ledger in order to move funds around or change the actual value of those funds within accounts. That is a direct problem that we will see with USDC, and it will be interesting to see how they solve this issue. So let's carry on reading. KYC can be done at the source, but not everyone who pays for goods or services afterwards would be identified unless onboarding requires people to use only one kind of wallet, which would create a monopoly that could be subject to antitrust legislation. If the idea is to create an ERC20 token, then any wallet that is ERC20 compatible can in theory receive USDC payments. Circle will have to police activity on their blockchain or payment system, which will probably be a glorified database and not a blockchain to prevent this. Me personally, I prefer blockchains to glorify databases, but we will have to continue reading to understand. Stable coins can cost you your freedom. This puts everyone back in a world in which financial institutions can exercise their veto power over transactions and governments who are in charge of oversight. We all know how that ends. Remember the 2008 to 2009 economic meltdown, giving up freedom for the sake of a stable coin and leaving your financial destiny in the hands of banks and governments for the sake of enabling smart contracts could be a bad deal. I agree. It's not worth giving up your financial freedom unless stablecoin can create a payment protocol system in which we don't have the risk of having our funds removed forcefully. If that happens, having our funds had access to outside of our own control, and only our own control, and whoever we allow to have control over our funds, I think it's a big risk. I think it's a move back in terms of crypto. It's a step backwards. We don't need that kind of pressure right now. And my sake of the argument is, if stablecoin comes out and for some reason it's hacked and everyone loses their funds, who's going to face the onslaught of the community when they say that cryptocurrency isn't as stable as it always was? Cryptocurrency isn't secure as it always was because stablecoin got hacked and everyone got wrecked. You know what I mean? I don't think it's worthwhile, but it's going to be interesting to see what they do. And that, everybody, is the end of the Coinversation. I hope you enjoyed this video. It is the first of many to come. That will happen every single Monday. And if you have any suggestions, I know my first suggestion to myself is get somewhere that doesn't have such bright sunlight, because it was literally sometimes in my eye and I was like, sunlight in my eye. You know, I'm not a vampire, but like it's hard to read your phone when there's a gigantic sun on it. But the studio in which we record will always be changing, and you might be asking, why did I choose this location? You know, why not just do it in an office or do it in some sort of indoor area? I'll show you why. You know what I mean? I'll flip and show you why. Check out this out. So we're actually in the center of a maze right now. And this maze, I actually created a video on the BroKaine channel called Getting Out of the Crypto Maze, which has not gone live yet, but I thought it would be very cool to showcase this, because we were talking about things and stuff happening within the cryptocurrency markets, and it feels like a maze to try and get your way around cryptocurrency sometimes. But if you stick around in the maze long enough, you'll know how to get out of it. You know what I mean? So it's all about being prepared, you know, not selling your coins when it's sea of red, you know, thinking about it before you sell for profit. You know, when you're going into cryptocurrency, when you're making a purchase of cryptocurrency, can you afford to lose that money? We have to be careful, we have to be safe. We can make $1 million, but you know, why not make like 1/50th of that and actually have enough money to get to the end of the road of your month, when that currency doesn't actually give you the profits that you believe it will. You know what I mean? That's what I believe. And you'll notice now that we've actually made our way out of the maze. So we can effectively say that with Bitcoin Chaser, we'll get you out of the cryptocurrency maze by keeping you up to date every single day. Cheers, everyone. Bye-bye.